An unexpected announcement from the Bank of Canada today. It raised its benchmark interest rate again. The central bank hiked the interest rate a quarter point to 1%. That drove the dollar up 81.5 cents U.S., its highest level in more than 2 years. BNN's Jon Erlichman has the impact.
With things looking up for Canada's economy, the Bank of Canada decided it's time to put an end to easy money. Its latest quarter-point interest rate hike follows a similar move in July.
This bank very clearly established if the data are strong, we're going to be willing to hike, and that's what they did today.
In its release, the Bank of Canada cited strong consumer spending, solid employment, and income growth. Investors responded by pushing the loonie to its highest level in more than 2 years. Higher interest rates make Canada more attractive to foreign investors, which boosts demand for the currency. Of course, low interest rates made borrowing money feel like a good deal.
So we could get into great houses and maybe, purchase cars or take trips.
A new survey by the Canadian Payroll Association says nearly half of all workers are living paycheck to paycheck. So for Canadians deep in debt, higher mortgage rates are a scary thought.
You're talking 25 or 50 bucks a month. People can handle that very readily. You're talking about 100 or 150. Now we're talking a different story.
The bank plans to keep an eye on cooling housing markets like Toronto, where home prices are down more than 20% since April. But economists note there are other factors to consider.
It's called the Bank of Canada, not the Bank of the Greater Toronto Area. So they're certainly not going to carry out policy because of the housing market in one region.
And Canada's big banks were quick to respond today, boosting their own prime rates. Lisa?
All right, so it was a bit of a surprise today, but when is the next scheduled announcement, John?
We're roughly a month away, and if the economy continues to grow, don't be surprised if we see another rate hike this year.
Okay, interesting. All right, thanks, Jon Erlichman.